This is Horizons Middle East and Africa. Our top stories this morning. Table for three. U.S. President Donald Trump says he has urged Russia's Vladimir Putin to begin arranging a summit with Ukraine's President Volodymyr Zelensky, to be followed by a trilateral involving all three leaders. Investors are cautious, with a focus shifting to the Fed after Trump's meeting with Ukrainian and European leaders ended with a call for a summit with Russia. And Hamas says it has agreed to a Gaza truce proposed by Qatar and Egypt. We're live in Jerusalem with the details. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in Johannesburg. I'm Jennifer Zabasaja in for Jumana Bersechi, and plenty for the markets to digest, especially after that meeting at the White House on Monday between European leaders Trump and Volodymyr Zelensky. But we're seeing U.S. equity futures starting marginally weaker today, especially after what was a relatively tight, narrow range that we saw markets trading in on Monday, especially as they were waiting for that meeting to happen. We're potentially seeing equity markets focus squarely on what is coming later this week. That is retail earnings from some big U.S. companies. But then, of course, the main event of the week is that speech from Jerome Powell at Jackson Hole. We're also seeing European equity futures marginally posting some modest gains, starting Tuesday off a little bit stronger, especially after we did see European leaders emerging from those talks on Monday, apparently suggesting that there was a bit of progress, but still just modest moves for global equity markets. And then Brent crude is also weaker on the day, down about 0.5% right now. Our Markets Live team leader, actually, Garfield Reynolds, suggesting that geopolitics is at play when it comes to energy markets, and potentially a longer peace process within European leaders, and especially talking about Ukraine, could lead to a lower path for oil moving forward. Brent crude at about $66.25 a barrel there. But let's check in on how markets in Asia are faring. Min Min Lo is in our Hong Kong studio with more. Min Min, what are you watching? Quite a bit of red on the screen there.
Yes, Jen, a sea of red across Asian markets today. There are not many drivers in markets, and it looks like investors are really on edge as we look towards that Jackson Hole meeting end of the week. But we're keeping an eye on the JGB bond yields today, because there are bond auctions for the 1 year and the 20-year today. And the 20-year in particular, we saw very weak demand below the 12-month average. And here you can see the melt up in yields across the different tenors. And it shows that perhaps investors are still not ruling out a potentially live meeting in September. Of course, we also have the CPI data out of Japan on Friday as well, expected to remain sticky. So we continue to keep an eye on this, likely a drag on the fixed income space. But flip the board, taking a look at China as well. And we have been seeing sea of green here in China, quite a different story here. And actually, it's still been this very slow burn, building up to this big rally that we are seeing in China, right, over the past many months. And investors are now questioning whether this rally has legs, because we did see margin balances now at close to the levels that we have seen in 2015. This is after the Shanghai Comp hit record, hit above the 10-year high yesterday. So a lot of interest that investors say are largely driven by institutional investors, and analysts are saying that yes, this rally still has legs, given that a lot of retail investors are still on the sidelines. Once they participate, we could see this rally extending further. Jen.
Thanks so much, Min Min Lo in Hong Kong for us there. Let's turn back to our top story. President Trump says he has pitched a one-on-one meeting between Russian President Vladimir Putin and Ukrainian leader Volodymyr Zelensky that would be followed by a trilateral summit involving all three of them. That follows his Monday meeting with Zelensky and several European leaders at the White House.
The war is going to end. When it ends, I can't tell you, but the war is going to end, and this gentleman wants it to end, and Vladimir Putin wants it to end. I think the whole world is tired of it, and we're going to get it ended.
For more on this, let's bring in Bloomberg News Desk editor Balazs Pence. So, Balazs, a bit more of a jovial environment that we saw at the White House. Give us the latest on what we heard.
Well, certainly a full day of diplomacy at the White House yesterday, and the biggest takeaway is that change in tone and that show of unity between the U.S. and Ukraine, which helped answer some of the questions that the European leaders had going into the meeting off of the back of the Putin Trump summit in Anchorage, the tone was very different from Zelensky's last Oval Office appearance back in February. It was almost jovial, as you said, especially considering the stakes. But there were also some tangible takeaways. One is the summit that President Trump is pushing for, first a bilateral meeting between President Zelensky and President Zelensky and Putin, which was one of the Ukrainian president's main objectives going into the White House meetings, which could be followed by a trilateral meeting with the involvement of the U.S. president. The other big takeaway to emerge from this day of diplomacy was the potential from security guarantees for Ukraine, which was one of the other main targets for the Ukrainian president. It seems like there could be some sort of U.S. involvement in a security structure to emerge after there is a peace agreement. That was one of the big asks, one of the big objectives from the European leaders as well. And it seems like there has been some progress on that front too.
Well, and Balazs, it seems like, at least from Trump's perspective, he wants to expedite the potential for a resolution here. But what are the likely next steps, and how close are we actually to seeing a peace deal emerge?
Well, what we heard is that the meeting between Zelensky and Putin might happen as soon as within the next 2 weeks. But meetings are one thing. How close they can get to agreeing on something is a different thing. These two countries are very far apart on what they want out of a peace agreement. They have very different objectives. They have very different goals in how they want this conflict to end. There's the very large issue of territorial exchanges, of how far Russia can go into Ukraine, how much territory they might be able to keep after a peace agreement. And there are also other very sticky issues, one of those being that security arrangement that Russia might not be too happy about.
All right, thanks so much there. Bloomberg News Desk Editor Balazs Penn starting us off there with our top story. Now, markets are moving in narrow ranges as traders weigh talks surrounding Russia's war in Ukraine while awaiting Fed Chair Jerome Powell's speech at Jackson Hole later this week. Joining us is Haig Bathgate, CEO at Callanish Capital. Haig, thanks so much for joining us. So we just had Balazs there taking us through what we saw on Monday. I wonder if you take a look at sort of the ranges that we're seeing markets moving in. Are we seeing more probability that's already priced in to the markets right now of a peace deal?
Yeah, I think so. I think it's been moving that way for the last 6 to 8 weeks, which is quite interesting. It just shows you how good the market is at predicting these things that obviously we are only exposed to a very small part of. But certainly we've seen some of the European defence stocks starting to sell off a bit. I mean, they were at enormously inflated levels. It's something we discussed before. So that was kind of long overdue, a correction. But yeah, I think the market is pricing in that there will be some kind of resolution, or at least there'll be some sort of de-escalation of tensions. And that's exactly what you would expect, I think, at this stage too.
What do you suspect then for the next few days, especially as we await for that speech from Jerome Powell? Do we continue to see a bit of caution in the markets? Is that how you're approaching the day?
Yeah. I mean, we see a lot of risk in Western government bonds generally, the UK, the US, particularly at the long end. You've obviously got Powell's tenureship coming towards an end. And you're going to see, as we've seen so far, a lot more intervention from governments in monetary policy. So that doesn't tend to bode well for markets because it increases the uncertainty. On top of that, we've got we're starting to see the latent impact of tariffs in the US increasing inflation. So it's just too risky for us, and there's just not enough return on the table for us to contemplate going into longer dated Western government bonds at the moment, given the volatility that you could endure in those assets.
Do you even stand by that, Haig, despite what we heard from S&P Global Ratings on the U.S. economy? You're still sort of standing on the sidelines with U.S. longer-dated bonds?
Yeah, I think so. We're actually quite positive in the outlook for the U.S. economy, but it's just the interference. And if the market gets a sense that there's too much intervention from Trump, or we get a very, very cozy relationship between the Federal Reserve and the US government, that could send a signal that inflation could not spiral out of control, but could certainly be out of range from norms. And I think it'll just take a bit of time for the markets to digest the long-term implications of that. So again, there are plenty of asset classes out there that just look more attractive to us on a risk-return basis than US government bonds and particularly UK government bonds.
Dig into that a bit more, Haig, and especially because I know you are a bit bullish on China tech.
Mm-hmm. Yes, again, it's the relative valuation argument. Obviously, we've had, and we're still very positive actually on, as I said, on the US economy and the US stock market for that matter, even though it's been driven by such a small number of names. Yeah, but the valuations have been incredibly bombed out in Asia and particularly in China. And we are starting to see more momentum in that market. I think as your previous commentator was just alluding to, there is a sense that there's maybe a change now. We've seen sort of false dawns many times in China, but I think, in terms of some of the results we're getting last week from the likes of Tencent, there are some incredibly good companies in China that I think are often overshadowed by the geopolitical environment.
So you don't believe the valuation potentially has been overblown and could actually unwind at a certain point?
Yeah, so I think in our view, some of these Chinese companies are, not far off, if not as good as some of the US counterparts. When you compare the valuations on that basis, they look, almost astoundingly good value. So I think if we see some sort of catch up in China, if we see sort of a settling down of some of the geopolitical tensions, which we're really starting to see, I think a bit more now. I mean, you see Trump's now talking about, getting towards the end of these tariff discussions. All of that is a net positive for China and Asia more generally. And that, again, that's against the backdrop of very, very strong markets, obviously, in the West and particularly in the US too.
What do you think will be the next catalyst then, Haig, potentially for a bit more direction for the markets? Is it Jerome Powell's speech later on Friday?
Yeah, I think so. I mean, again, just how much credence we'll pay. There's obviously a lot of ongoing tensions between Powell and Trump. So I think really where we'll start to see some certainty in markets is when we get a sense of what Trump is planning to do in terms of, the future Fed governor. If we get a sense from Powell, just, whether he does feel that there is a need to cut interest rates. Obviously, he's been told to cut interest rates by Trump and he's resisted that temptation so far. So I think anything that gives us just a little bit more certainty on the direction of travel. And obviously, if there's a thawing of just conflict between Trump and various factions, whether that be the Fed, whether it be, international trading partners, that net will be seen as a good thing for the markets. And on top of that, as you've alluded, the outlook for the US economy is still pretty strong at the moment. So the underlying fundamentals are quite supportive of markets.
All right. We'll leave it there with you. Haig Bathgate, CEO at Callanish Capital, joining us there with your insights. Thanks so much, Haig. Great to get you on the show. Now, SoftBank has agreed to buy $2 billion worth of Intel stock at $23 a share. The investment boosts SoftBank's chip ambitions and delivers a strong vote of confidence in Intel, which has struggled to remain relevant in the AI sphere. Meanwhile, Bloomberg has learned the Trump administration is in discussions to take a stake of about 10% in the chipmaker. Sources say the federal government is considering a potential investment that would involve converting some or all of the company's grants from the U.S. Chips and Science Act into equity. Coming up, Hamas says it has agreed to a ceasefire proposal. We're live in Jerusalem with the details next. This is Bloomberg. Hamas says it has agreed to a truce deal proposed by Qatar and Egypt to pause fighting with Israel in Gaza. A diplomat told Bloomberg the proposal would see Hamas release half of the hostages it still holds in exchange for the release of Palestinian prisoners and a partial withdrawal of Israeli troops. For more on this, let's bring in Bloomberg's Dan Williams, who is joining us now from Jerusalem. So, Dan, what are the details of this proposed deal, and what do we expect from Israel?
Well, the details are sketchy, and there's a big question over whether this development, while interesting, presages a breakthrough, or whether it might be an exercise in buying time by Hamas. It's worth remembering that Hamas is under a great deal of pressure. Israel has vowed, perhaps imminently, to push its military into Gaza City. That's the de facto capital of the Gaza Strip, the de facto seat of Hamas government. Israel says that operation would topple Hamas after almost 2 years of war. Meanwhile, in the region, the Arab League just 2 weeks ago passed a resolution basically treating Hamas as the spoiler in this conflict. Western countries that are poised to recognize a Palestinian state next month have had the proviso that that state should not include Hamas. And you have the US President Trump saying yesterday that he thinks Hamas should be destroyed. So it could be that Hamas is pitching here to cast itself not as the spoiler and put the onus on Israel to respond, perhaps to refuse this overture in the hope that Israel will be treated as the spoiler. It could also be that Hamas is re-examining the idea of what's been described as a short-term truce, a 60-day truce, under which half of the hostages it holds would be returned. The question is, if that's the case, how different this is from the so-called Witkoff proposal running back several months, which had apparently stalled in talks just a few weeks ago in Doha. There's a lot unanswered yet. The Israelis, for now, are not saying how they're responding. I think what they're going to do is wait to confer with the Americans who've been helping them out in these talks to see how serious this counteroffer might be and whether it should be pursued.
We'll see how this all develops. Bloomberg's Jan Williams in Jerusalem with the latest there. Thanks so much, Jan. Appreciate it. Now, coming up, we turn to the region here. Kenya turns to its diaspora community to help plug a widening budget gap. The details on that next. This is Bloomberg. Kenya is turning to its diaspora community to help plug a widening budget gap. The government is weighing plans to raise as much as $500 million by borrowing from citizens living abroad. For more, Bloomberg's Ndira Oganga is joining us now from Kigali, Rwanda. So, Ndira, what more do we know, and how does this fit into the broader financing plans for Kenya?
Good morning, Jen. So this has been a long time coming. We know that the government in the fourth quarter of 2024 was considering raising a diaspora bond, but they put these plans on the back burner saying that they're not sure there's enough demand. But they've decided to resuscitate this plan, saying that after looking at the numbers, they're now certain that Kenya is primed for a diaspora bond because there is enough demand. And what we're seeing now is the government is currently in talks with a unit of the World Bank for two things. One, on how to structure this diaspora bond if they're going to issue it out, and second, for political risk insurance for projects of this magnitude. And it couldn't have come at a better time because Kenya is grappling with a couple of things. One, they have very little headroom to borrow because their debt burden is rising, debt sustainability has become an issue. And second, there is very little room to raise revenue domestically, particularly when it comes to taxes. We've seen attempts by the government turn into deadly protests, and this is a red zone that the government cannot cross. And so they're becoming more creative and diversifying ways that they can actually raise revenue. And diaspora bonds are one of them. If you look at remittances, 4.13 billion in 2023. And this offers reliable access to financing to the government, and it's far more cost effective than commercial borrowing. On the other hand, the government will have to contend with issues like trust, where they'll have to ensure that the people trust them, things like ensuring the bond is dollar denominated, how is it going to be distributed, and also other things like ensuring that the rates are competitive and their tax incentives to ensure that Kenyans are interested in these projects that could go into funding mega infrastructure projects in the country like roads, railway, hospital, and upgrading the airport in the region.
All right, thanks so much. Bloomberg's Ndira Oganga with the latest on Kenya's financing situation, joining us from Kigali, Rwanda. Let's turn to South Africa. South Africa's third largest bank, Absa, rose as much as 2.6% to its highest in 6 months. That's after the lender posted a 14% increase in first half profit. The group's CEO, Kenny Fihla, tells me the company is looking to merge banking operations in other parts of the continent as it tries to take on its biggest competitor, Standard Bank.
Africa regions, i.e. all our businesses, excluding South Africa, present a massive potential to the Absa group. we do not have the scale in all the markets within which we operate. We have some decent businesses that are very, very good at certain product types and certain client segments. But I think there's an opportunity for us to increase our scale and to make sure that we can be competitive and dominate in our chosen client segments and geographies. And when I sort of looked at our sort of businesses in East Africa, there's no doubt that the opportunity for growth there is massive. We run 2 banks in Tanzania. There's absolutely no reason why we shouldn't consolidate and create one business that can have massive scale and consequently can be leveraged to effectively increase our market share in that particular market. We also have an opportunity to increase scale in Uganda, in Kenya. We've got a large business in Ghana, but if one excludes Ghana and look at all the other markets, there is no doubt that the opportunity to create scale as well as to diversify our revenue stream is massive. And consequently, I think over a period of time, we will see the relative contribution of Africa region increasing at a faster pace than that of South Africa.
What's that timeline for you? What are you targeting?
I think that one cannot put a definitive timeline, but it is something that we have to start working on almost immediately. I have visited Tanzania and Uganda. There are certain initiatives that are already underway in those 2 markets. I'll be visiting the other geographies as well to get a sense of the opportunity set. That does not mean that the teams are waiting for me to visit. They are naturally looking at where they can increase market share, what solutions are required for them to be more competitive. My visit will simply be lending more weight and giving impetus to the initiatives that are already underway. In the medium term, I think the shape of the Absa business and the relative contribution of these businesses will definitely shift in favor of Africa regions.
That was Absa Group CEO Kenny Fihla speaking with me. And it is a big earnings week for the African continent. A little later in the show, we will also be hearing from MTN Group CEO Ralph Mupita. The company reported earnings yesterday. West African telecommunications provider Sonatel will also be reporting later today. Exaro and Access report on Thursday, while Goldfields and South Africa's pharmaceutical company Adcock Ingram report on Friday. Now, coming up, riding the AI wave. Investors see the boom driving EM returns for years to come. We have the details on that next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Table for 3. U.S. President Donald Trump says he has urged Russia's Vladimir Putin to begin arranging a summit with Ukraine's President Volodymyr Zelensky, to be followed by a trilateral involving all 3 leaders. Investors are cautious, with focus shifting to the Fed after Trump's meeting with Ukrainian and European leaders ended with a call for a summit with Russia. And we speak with Woodside Energy CEO Meg O'Neill after Australia's biggest LNG producer reported tumbling first half earnings. It's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in Johannesburg. I'm Jennifer Zapasaja in for Jumana Bersachi, and markets seeming to digest the meeting that did happen on Monday evening, and now focusing squarely on what is happening later in the week in the U.S. That is retail earnings, but then, of course, it is that speech from Jerome Powell coming at Jackson Hole later in the week. If we take a look at U.S. equity futures starting Tuesday, marginally weaker. That's after at least we saw the S&P closing slightly down on Monday, though we're seeing equity markets really trading in quite a narrow range. And as I was mentioning, the focus is shifting from geopolitics potentially after that meeting on Monday to now what is happening later in the week. Though we are seeing European equity futures starting the day off, at least posting some modest gains. Of course, European leaders were at the meetings at the White House, potentially suggesting that there was some progress on those talks, but seeming like markets are in a bit of a holding pattern. If we take a look at the MSCI Emerging Markets Currency Index, we're seeing the Bloomberg Dollar Index broadly stronger across G10 and EM. As you can see there, we are seeing that index slightly weaker on the day, and we're seeing the Bloomberg Dollar, though, extending gains for a second day. And Brent crude still seeming to be focused squarely on geopolitics. Our Markets Live team leader, Garfield Reynolds, actually suggesting geopolitics at play here when we take a look at energy. Potentially a longer peace process and talks continuing could lead to a lower path for oil. Brent crude trading at about $66.17 a barrel there. Now, let's turn to some other stories we're following. Emerging market funds are piling into tech to ride the artificial intelligence boom on expectations it will drive returns for the next decade. It's already been a winning trade. AI companies are the 6th biggest contributors to the rally in Bloomberg's EM Stocks Index this year. For more, let's bring in Srini Sivabalan, our senior emerging markets editor, who's joining us now. So, Srini, if the U.S. is the epicenter of AI, which many investors we speak to do say it is, why are they now looking to emerging markets for this trade?
Good morning, Jennifer. Thanks for having me. First of all, emerging markets have an advantage over US in AI because US AI is a bet on the US winning the global AI race, right? But emerging markets are like a hedged portfolio where if the US wins the global AI race, there's one set of companies that can succeed. Taiwan Semiconductor Manufacturing Corporation, SK Hynix, and so on. And then if China makes strides in AI, there's a whole set of stocks that will win, Alibaba, Tencent, Xiaomi, and so on. So irrespective of how AI shapes from here on, emerging markets do have a winning a chance at winning the AI race. So that is the key advantage that emerging markets have over the US. However, the valuations are quite reasonable at this point. You would say NVIDIA trades at about 35 times forward earnings. In the emerging markets, in comparison, you have TSMC that trades at like 18 and Alibaba trading at 13 times PE. So valuations are another compelling reason.
But Srini, as your story points out, the rally is really currently fixated on a number of major companies that we talk about quite often. How long is this likely to continue?
Well, yeah, that's anybody's guess. But AI is a mega trend that's spreading around the world, and it can go beyond, temporary fluctuations in the risk sentiment. And that is one thing that we have seen in the last 2 years, that even though investors' perception of emerging markets, ebbed and flowed, we have seen AI making steady progress because this is a generational opportunity.
All right. Thanks so much, Srini Sivabalan, our senior emerging markets editor, there with a story that he is now out on the Bloomberg. Let's turn back to the Middle East, though. Iran's 12-day war with Israel back in June is seen as the most damaging in the Revolutionary Guard's history. But despite weakening it, the IRGC is seen to have emerged more central than ever to Iran's politics and security. For more, we're now joined by Bloomberg's Patrick Sykes, who is also a contributor to this story that's out now. So, Patrick, how is the IRGC positioning itself after the war with Israel?
Morning, Jennifer. Yeah, you're absolutely right. It's important to state, first of all, it's definitely been weakened, right? Top echelons have been assassinated completely by Israel. It suffered to an extent a great embarrassment in the extent to which Israel was able to dominate, particularly in the air aspect of that war. And yet, in the aftermath of it, in the way that Iran has sought to regroup and recuperate, we've seen the IRGC taking a really prominent role. It's filled a lot of the slots on this brand new defense council, National Defense Council, that will be key, I think, to any sort of chain of command situations in any future skirmishes with Israel. And then there's a way in which it's also standing to benefit from this uptick in nationalist sentiment, right? While it's both embarrassed that, in the way the war unfolded, it's also the most capable fighting force in the country. It did have some small wins, it would say, against Israel during the war, be it missile strikes against Israeli cities or downing Israeli drones that were trying to attack Iran. So it could also, if it plays its cards right, benefit from that uptick in nationalist sentiment as the sort of vanguard of the Iranian military in any future skirmish as well.
And Patrick, as you note in the story, it's not just another military group. It's really quite central, as we pointed out in the intro, to the happenings within the region. Can you walk us through financially what it does and how key it is to Iran?
Yeah, so it's known obviously abroad as a military force. We're all familiar with those groups that it backed across the region, like Hamas and Hezbollah. But internally, it's also the face of putting down protests. That's how many Iranians will interact with it, if at all, during daily life at those times of unrest. And then also, I think much less known abroad, it's also got huge business interests, right? Spanning from hospitals, TV stations, and in particular engineering. It was even involved in the construction of the Tehran metro. That construction engineering expertise is a legacy of the war with Iraq in the 1980s, where there was huge damage and huge reconstruction required in the wake of it. Obviously, the war we've seen more recently in June was a much shorter affair, but there was a lot of damage done. And I think the IRGC will be in a pole position to be able to take advantage of that, use its engineering construction expertise to get those key contracts, and again, reassert not just its military dominance, but also its economic position in the country.
It's a fascinating story there. Bloomberg's Patrick Sykes joining us. Thanks so much, Patrick, for that report. Now, Africa's largest telecoms company, that's MTN, is revamping its South Africa management to spur growth after the unit lost ground to its Nigerian division. CEO Ralph Mupita told me the antitrust watchdog's approval of a merger between two rivals signals strong prospects for further consolidation in South Africa's telecom sector.
South Africa is quite a mature market. Handset penetration is actually very, very high, and it looks more like a European market. So here you have to focus on kind of winning share from others. You have to focus a lot of on efficiencies, and actually the deployment of capital becomes very important. So we also, so those are the dynamics that are in South Africa that are quite different from the rest of the continent. South Africa is probably more, you could look at it as a market where you've got to defend your own base and incrementally pick up more. The net additions are much lower than in the other markets. And so it is a business that we need to make sure that continues to deliver a strong cash generation engine, and that's part of the mandate that Ferdy and Yolanda, as CEO and Deputy CEO, will have starting on the 1st of November.
In terms of picking up more, does that mean potentially acquisitions like we've seen in the telco space in South Africa?
I will look at everything. I mean, we've always been, strong proponents of that. South Africa needs market consolidation. There are too many players in South Africa for the profit pools that are available in the telecommunications, and we've been consistent on that. And we've encouraged the authorities to look elsewhere and see how consolidation, like a place like India used to have 14 plus operators, now it has 3. But actually the level of digital economies, infrastructure investment and sophistication is much higher than when it was 14. And I think this has a similar, there's a read across here also to South Africa, is that market consolidation, we believe is inevitable. It may take us a bit more time, but, more recent news flow, particularly around the Vodacom CIVH, for us, even though we compete with them, is encouraging that the competition frameworks are being looked at differently to attract investment.
That was MTN Group CEO Ralph Mupita speaking with us a bit earlier. Coming up, first half profit slump. We talked to Meg O'Neill, the CEO of Aussie natural gas giant Woodside Energy, about the numbers. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. In 2022, Saudi Arabia announced one of its most ambitious endeavors to date, a ski resort designated to host the 2029 Asian Winter Games. But Trojena is now emerging as a great challenge to the kingdom's $1.5 trillion plan. Joining us now is Abir Abu Omar, Bloomberg's Middle East economics and government reporter. Abir, talk us through this project and really what the goal and the intention was behind it.
Good morning, Jen. So Trojena is this, project in Neom. It's one of 5 big constructions in Neom, including Sindala, The Line, Oxagon, and Magna. It's estimated to be at around $19 billion to be constructed, and it's the main site that is supposed to host the 2029 Asian Winter Games. So it's, it was supposed to be this big, massive construction in the Saudi desert that is supposed to feature ski slopes, a ski resort. Now, Jen, you've been to this region, you've been to Dubai. The temperatures could get up to 50 degrees Celsius. And so it was really an architectural marvel to be created. But it's also a big part of the Crown Prince's Vision 2030. That's the economic transformation plan that's supposed to get the world talking about how Saudi Arabia is going to sort of wean itself away from oil and get, again, the world talking about the architectural wonders that are seen in Neom, and that's worth tens of billions, if not trillions at this point in value.
And Abir, we speak quite often about this Vision 2030 plan and the kingdom's plans to actually get there and some of the troubles that they've had there. Does this complicate that even further?
Yeah, so look, Trojena is a little bit different from other projects in Neom, and the reason I say this is because we had spoken to multiple sources for this story, and the main issue with this is they're working with a deadline, right? The Winter Games have to happen in 2029. So we've spoken earlier about The Line possibly getting a cut in, the size of it. We know that it's getting a strategic review. We know that Sindala, another part in Neom, has faced some issues as well after its soft launch last year. But Trojena in specific, the main issue here is, again, as I mentioned, the geography of Saudi Arabia. And the reason I say this is because they were expecting to have snow. Now that area gets very limited snow during the winter. And so they needed to create a lake that is frozen, a frozen lake in Saudi Arabia. Now, the price tag on that is absolutely huge, but also it is complicated to engineer. And so they're working with a deadline. It was supposed to be completed by 2026. It's just around the corner. And it looks like that deadline is not going to be achieved. Now, we don't know what's going to happen to Trojena. We don't know if it's going to get a cut in the way that it was envisioned in the beginning, or if they're going to meet the deadline. Contingency plans for these kind of things are usually put in place. But as of now, what we know is that Trojena is, at the possible risk of missing its deadline.
It's a really interesting story and our big take for the day. Abir Abu Omar, Bloomberg's Middle East economics and government reporter there with an update from Dubai. Now, coming up, first half profit slump. We talked to Meg O'Neill, the CEO of Aussie natural gas giant Woodside Energy, about the numbers. That's next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Let's head to Australia for some earnings. Woodside Energy shares falling today after first half underlying profit plunged 24% from a year earlier. That's as the natural gas giant booked charges on exiting a U.S. hydrogen project and decommissioning several fields. Meanwhile, first half revenue jumped 10% year on year. The company also maintained its full year production guidance. Joining us now is Meg O'Neill, CEO of Woodside Energy. So, Meg, let's just start there because we are seeing shares falling, as I was just mentioning there. How would you rate sort of the reaction that we're seeing now that you've put out this guidance?
Look, I think we're seeing a bit of pressure in the market at large. When we look at the fundamentals, it was a really strong first half for us. Very strong production numbers, up 11% versus the same period 2024. When you look at unit production cost, that was down 7% versus the same period last year. So when you flow it through to the revenue, very close to the previous year, even with some price softness. The profit is down, but that's a result of depreciation, particularly as we've brought a new asset online, a field called Sangomar offshore Senegal. That will normalize over time as we continue to get more production data and add more reserves. The depreciation rate will come down. But the real headline from Sangomar, is the operational performance, running basically at nameplate capacity, 99% reliability, and almost $1 billion of revenue. So all in all, it was a strong performance for us, and we've been able to reward our shareholders with a dividend at the upper end of our payout range, 80% of underlying net profit after tax. So, it should be a good result for our shareholders as well.
When you look at the year ahead, though, Meg, where are you expecting to face a bit more pressure in terms of demand, either accelerating or lagging a bit from the past year?
Yeah, it's interesting. One of the things that we've seen is as OPEC Plus have unwound some of their cuts, we've seen oil prices start to soften. Oil prices also have a heavy geopolitical overlay. So what's happening in Russia, what's happening with sanctions, what's happening in Venezuela, all of that affects oil prices. What's really interesting for us, and we've been able to capitalize on, is the fact that gas prices, both in Europe and Asia, have stayed strong. So a lot of LNG, our main product, is sold with a price that links to oil. But we sell about 25% or so of our LNG on prices that are just those gas market prices. And that was a $3 uplift, probably 25% uplift versus what we would have received had we sold it on oil indexation. So I think we're very well positioned. We're well positioned for the gas market to pick up as you head towards Northern Hemisphere winter. That's when gas is really in demand. So we do expect to see prices start to strengthen even further as we head towards the back half of the year.
Do you see that sustaining, though, and especially when we talk about LNG in Asia, sustaining into 2026?
Look, one of the things that we focus on is the long-term investment environment. So short-term things like weather can have a big impact. Obviously, the conflict in Ukraine and Russia had an impact 2022. But when we think about the long term, we do see sustained demand growth for LNG. When you look at the growth in economies in Southeast Asia, the growth in the Indian economy, even China continues to build out new LNG receiving facilities. So the forecasters that we reference, would suggest that there's, something like a 30 to 40% demand growth in LNG in the coming decade. So, very significant opportunity for a company like Woodside that's got that very strong focus on liquefied natural gas.
And Meg, we've focused in on LNG, haven't yet talked about green hydrogen. Do you see the company then prioritizing LNG? Do you not see the opportunities that exist in LNG within green hydrogen?
Look, I'd prefer not to use colors. We talk about lower carbon hydrogen, and there's a lot of different ways of making that product. You can make it starting with natural gas molecules and breaking that molecule and then sequestering the CO2 through carbon capture and sequestration. Or you can use renewable energy like solar or wind to crack apart a water molecule. So let's park the color designation. One of the things that we have seen, and we've been looking at a number of hydrogen projects around the world over the past 4 or 5 years, we've seen the customer market evolve more slowly than expected. But that said, whilst we did stop work on a project in Oklahoma, last year we made a very significant investment decision in a lower carbon ammonia project in Beaumont, Texas. And lower carbon ammonia, we see the market developing where that could be used as an alternative to more conventional fuels, so used either as a marine fuel or used in power generation. So, we do continue to have an ambition to invest in these low carbon energy sources and the alternatives to conventional fuels. But the market is evolving more slowly than folks might have thought 4 or 5 years ago.
So it could be an opportunity for people who see that green hydrogen could be a longer-term solution for emissions. Do you still think that we should be buying into that conclusion?
Look, as I said, I think we need to be really agnostic. Is it green? Is it blue? There's a whole color palette associated with hydrogens. What we're looking to tackle is an emissions problem. And there's a lot of different ways we can tackle that. Carbon capture and sequestration is a proven technology. It's been used in the US, for 50 years. It's been used offshore Norway for 20 years. So if there's ways to develop energy products like hydrogen, using CCS, and that's more cost competitive than a pure renewables-based hydrogen, I think that's what the market is going to respond to as it tries to get the balance right between energy reliability, affordability, and carbon intensity.
Yeah, and a number of projects that we know globally focused on that. We have to leave it there with you, though. Meg O'Neill, CEO of Woodside Energy, really appreciate your time. Thanks so much for joining us from Sydney there. That's it, though, for Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. Stick with us for Daybreak Europe. That's next. This is Bloomberg.